Vodafone shares jumped 13% on Friday after French billionaire Xavier Niel's family vehicle, Vega, agreed to buy EN's entire 16.21% stake in the company for £4.4 billion at 112.5p per share. That figure sits 13 to 15% above Vodafone's Thursday close of 97.76p, a meaningful premium for a minority stake with no governance rights attached. The tension is not in the price, it is in who is paying it. In March 2024, Niel told the Sunday Times, "Being a shareholder, I'm not sure my money is well managed. We've lost a lot of money since we bought our shares in Vodafone, and I'm not sure of the management of this company." He then sold his prior 2.5% stake through Atlas Investissement at a loss and exited. 2 years later, the same man has paid £4.4 billion to become the company's single largest shareholder. The provisional answer to why sits in Niel's pattern across 9 European markets. He does not buy stakes to hold passively. He buys them to reshape management, cut costs, and extract value that prior ownership left on the table. The open question is whether Vodafone's current structure, after its own restructuring program, still leaves enough to cut, and whether Germany, where the company most clearly trails its peers, gives Niel the leverage he needs to act.
When Niel took a 19.8% stake in Sweden's Tele2 in early 2024, the market initially read it as another passive financial bet. Within months, Tele2 announced a 15% workforce reduction. Shortly after, the management team was purged. Citi analyst Carl Murdoch-Smith flagged the parallel directly. "We believe investors will look to what happened at Tele2 after a Niel investment vehicle became the largest shareholder, such as a 15% workforce reduction plan, as a potential framework of what to expect." Murdoch-Smith added that investors would be watching closely for what level of board representation is requested by Mr. Niel. A spokesperson for Niel pushed back on this reading. The transaction on Friday was only a share purchase, and there was no governance package attached to the deal. That denial sits in tension with Vega's own statement, which said that as a significant long-term shareholder, it would expect an appropriate level of engagement with the company over time. The distinction between active engagement and governance rights is not semantic. Niel has twice tried and failed to buy Vodafone's Italian operations outright. The second rejection in 2024 was what prompted his public criticism and stake sale. His re-entry at a premium, with 17.1% of voting rights and no board seat yet negotiated, is the arrangement of a man who expects the negotiation to come later, not one who intends to watch from the sidelines. Morgan Stanley's analyst Akhil Dattani was blunt. Niel is not known to be a passive investor.
The assumption buried inside Friday's 13% re-rating is that Niel's arrival will unlock value in Vodafone's most troubled operation, Germany, where the company continues to underperform market-leading Deutsche Telekom. Morgan Stanley's note pointed directly at this. Market observers will now monitor how actively Niel and his management team engage with Vodafone's operational decisions, especially regarding Germany. That scrutiny is already live before Niel holds a single board seat. The counterweight to this optimism is UBS, which maintained a sell rating on Vodafone at 95p, below the current price of 110p, citing slowing momentum in Germany and a lack of positive catalysts after the end of its share buyback. In other words, one institution sees Niel as the catalyst that resolves Germany's structural problem. The other argues that the structural problem is precisely why no catalyst can move the needle yet. The buried assumption in the bull case is that Niel's influence translates from Tele2-style cost extraction, which works on a headcount-heavy operator, to the more complex challenge of winning back broadband subscribers in a market where Deutsche Telekom's fiber rollout has structurally widened the competitive gap. Cutting 15% of Vodafone's UK and Germany workforce does not rebuild fiber infrastructure. The more specific forward test is not Niel's governance request, but Vodafone Germany's next quarterly revenue trend, whether subscriber losses in broadband are stabilizing or accelerating. That number, not the shareholder register, is what decides whether the re-rating was a one-day trade on a Niel name or the beginning of a structural recovery in the stock. Friday's 13% move has already repriced Vodafone above UBS's 95p sell target, meaning the stock now trades in territory that one major institution explicitly describes as overvalued relative to its current operational trajectory. For a holder, the question is not whether Niel's intent is activist. The Tele2 evidence and Morgan Stanley's framing both point that way. The question is timing. Restructuring optionality does not pay out until governance is formalized, and Vega has only committed to appropriate engagement after regulatory clearance. The entry setup for the holder is confirmed if Niel secures board representation and uses it to announce a concrete operational program for Germany, a headcount target, a capex reallocation, or a strategic disposal within the next 6 months. That would convert the re-rating from a premium paid on a name to a fundamental change in trajectory. The trap is confirmed if Niel remains a passive financial shareholder, the UK government regulatory review introduces conditions that constrain his influence, and Vodafone Germany's broadband subscriber losses continue to accelerate in the next quarterly update. In that scenario, Friday's premium dissolves back toward the 97p level, and the Niel trade was a liquidity event for ENN, not a restructuring signal. For a watcher, the clearest single indicator to monitor is not Vodafone's share price, but the outcome of the board representation negotiation, disclosed through regulatory news service announcements. A board seat granted early is the signal that separates the recovery trade from the speculative pop. Niel paid 15% above market to own the right to make that call. The stock's next move depends entirely on whether he exercises it. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.